we're kind of slim tonight, I think, because of the people and the weather. But we are here, so we're excited that y'all are here. We're actually going to try to end just a few minutes early so that y'all can get back for it. Is it supposed to get bad? I'm really bad about following the weather. Me too. So yeah, so we're going to, well, welcome. I'm so glad that y'all are all here. But we're going to start with prayer, and then we'll go on to recognition, and then we have an awesome guest to teach us about some tax stuff. Okay? So let's, if y'all bow with me and pray. Dear God, thank you so much for today, and thank you for these people that are here that love Premier and love you. And I just pray that you bless each and every one of us that are in this room, God, that you would just help us to be encouraged by one another and by you, and help us to lift each other up tonight as well. We thank you for Premier. We thank you for all that it represents, and thank you that it is all about serving other people and loving you. We love you, and it's in your name. And we pray for all the people that are not here, and pray for safe travel coming here and leaving. We love you. It's in your name I pray. Amen. Amen. Okay, so we're going to do some recognition. This is going to be for the January accounting period. I know some of you are brand new in Premier, so you might just have had a training show, or you might have one coming up. But I want you to stand. I want everyone to stand if you love Premier. And you have clappers in your seat, so grab those. Okay, I want you to keep standing if you did one show in January. Keep standing if you did 2, 3, 4, 5, 6. Okay, 5. Okay, you do 5 too?
One of them was actually at the end of.
But it doesn't matter because it was in the accounting.
Yay! So I did want to remind you, so 5 shows is what is considered consistent, 4 or 5 shows, but just to remind y'all that they do have the consistency challenge. So if you do 5 shows a month, and help me, 5 shows a month for 6 months through July, then you can earn a half line of jewelry. If you do 5 shows in any 3 months, any 3 of the 6 months, then you get a quarter line of free jewelry at Rally. And then if you sponsor 7 people, then you get another half line of jewelry. So you could potentially get the full line of jewelry. Isn't that awesome? Yeah. So these girls are well on. Yay! It's not too late. We can all do 5 shows and get. Oh, but the most important thing besides that is if you do 30 shows in between now and Rally, then you get, or in July, then you get to go to a special reception with Tim and Peggy Horner and earn a little shovel necklace and get to send some. That's like the bigger deal than doing the 5 shows.
And I've heard some rumors about that party that it's going to be a lot more than we think it is. So
I'm sure it's going to be awesome, especially because this is the 30th anniversary. So.
Yes.
Thank y'all. Okay, stand up if you had one show that was $100. And training shows count. Well, you did say that. Keep standing if it's 200. 300, 400, 500, 600, 700, 800, 900. Yeah, what was it?
940.
Wow! Okay, stand up if your total retail for the whole month of December was at least, January, was at least $100. Yay! 500, 1,000, 1,500, 2,000, 2,500. What was yours?
$2,055.50.
Okay, stand up if you sponsor someone in January. Stand up if you are a new jeweler in January. I know you and you. Okay, y'all come on up here.
I'll give Michelle a ticket for sponsoring in the month of January.
Okay, so this is Rashonda and this is Mary Beth. Rashonda, tell them, well, what do we say? Oh, yeah, your favorite thing about Premier.
Yes. And introduce yourself, tell them who your Premier mom is.
I'm Rashonda. Michelle's my Premier mom, and my favorite thing about Premier is that you can have fun while working.
Yay!
I'm Mary Beth, and Michelle is my Premier mom. My favorite thing about Premier is all of the mission work that they sponsor.
Yeah.
We're glad that y'all are in the Premier family.
Yay!
Thank God, y'all can see. Okay, so I think that's it, right? Oh, calendar catch up. Okay, so a few things that you might want to jot down, or just to remind y'all. We have fun to share. It's actually next Monday night at Cheryl's house, because Danielle and I will be out of town. So make sure you come and bring a guest. If you've never been to Fun to Share, we encourage you to still come and bring a guest. But even if you just want to come because you've never been, that's awesome too. So that would be really great. Just let Cheryl know. With me. We'll be sending some little invitations out for y'all to remind you about that. Okay, and then we have our next new jeweler training is March 14th. So we want new jeweler training to be if you have had your training show and you're ready to, be working on your business. We want that to be something that you come to one time. Unless you sponsor someone, then you need to come with them to that. But that's March 14th. It's a Saturday from 9 to 1. We provide like some coffee and snacks and stuff like that. It's a lot of fun.
We actually provide breakfast for you, so.
Yes, so you should definitely come. And then we have training. Next month is a really big deal. It's actually, we're having Bob Bolander, who's the Vice President of Marketing, to come. And that's a really big deal, so make sure y'all come and bring a guest. I'm sure there's going to be some really awesome prizes for people that bring guests.
Yes. And Bob's doing an OP, so that'll be really awesome to hear an OP just from Bob. And we've invited like the whole Birmingham area, so 2 other large groups will be coming too. So get here early. I'll say up front.
Yeah, it's going to be a lot of fun. I'm sure there's going to be awesome raffle prizes too.
Oh yeah.
And then Jewel School is on April 25th, and that is the Drapers are going to be coming to that. So I think y'all heard us talk about that. That's actually going to be, it's in Gainesville. It's in Gainesville, which is like a 6-hour drive. So if y'all, are interested in going, definitely recommend that you go and you can carpool. And anyway, just wanted to remind y'all about that. And I think that's it. Yeah. Okay. Yeah.
Thank you, Michelle. Didn't Michelle do a great job? We're preparing her
I got
when
an
I don't get to
announcement.
be here. Oh, you have an announcement?
Yes, I do. I just wanted everyone to acknowledge that, well, number one, Claire just walked in, and she was also a consistency challenge.
Oh, yay!
But I want everyone to know that their leaders are also working their business and not just sitting back collecting a check. Danielle Smith and Michelle Leach both were in the consistency challenge as well. All right.
Okay, well, we're just going to play a quick, fun icebreaker game. We pretty much know everybody here, but, I get a little worried that we've moved to a facility like this and we don't get to mingle as much as we do in a living room, and so I want to keep it personal always. So we're just going to play a silly, fun game, which I think it'll be a lot more manageable because we don't have quite as many tonight. And then after that, then we'll sit back down and we'll get to take some great notes about our taxes. Who's ready for taxes? Come on, it's going to be a little bit more fun. Okay, good. All right, so here's what we're going to do. We're going to play a game. We're going to play a rock, paper, scissors challenge. Okay, so does everyone know how to play rock, paper, scissors? Okay, everyone put your palm out and grab your other hand. And we're going to play like this. Rock, paper, scissors, shoot. Okay? So that way whenever it's fair, everyone knows how to play that. All right? Let's try again. Ready? Rock, paper, scissors, shoot. Okay, so here's what you're going to do. You're going to find a partner, and you're going to battle it off. Okay? And then whoever wins is going to go find another winning partner. So if you lose, go find your seat. Okay? Be honest about that.
Can you find another loser and do it again?
No, you're out. No, you're out. Okay? And then we'll get a winner, and the winner gets the extra raffle ticket. Yay! Okay, all right, so everybody stand up and find a partner.
I need somebody.
You win, or I win.
She needs a partner.
I'm by myself.
Linda needs a partner.
Linda does.
No.
Okay.
Pretty good?
I'm not gonna get around.
All right, here we go.
All right, ready, go.
Rock, paper, scissors, shoot.
We're tied. Okay, sorry. Okay,
Okay, all right. I'm not gonna do it again. Winners find a winner.
Bring it, girl.
Winners find a winner.
What do you do if you're tied?
Linda, you do it again.
Keep going.
Rock, paper, scissors, shoot.
Oh.
I did paper.
Michelle Barker, let's go.
You won.
Okay. All right, who's my winner over here?
I have a one.
2 winners. Okay.
Come on.
Rock,
I'm gonna
paper,
do it
scissors, shoot.
Oh,
Come on.
y'all battle.
Me and you, girl.
Go. Ready?
Rock, paper, scissors, shoot.
Bam!
Okay, all right, I got 2 winners. All right, y'all come in here.
Damn.
Battle in the front. All right.
Uh-oh,
We got
uh-oh.
Melissa and Jennifer. Okay, y'all are gonna battle in front of the camera. Oh! Okay, do it again. Yeah, do it again. Oh!
Yeah!
Alright, Dave, get her an extra raffle ticket. That was fun, right? Oh, and hey, does anybody need a cookie before we start? You sure? Or a cup of coffee? Keep yourself up. I think Kevin's going to be exciting though, so it's going to be good. Alright, Dave, will you introduce Kevin?
Michelle doing her buzzer?
Oh yeah, Michelle's been nervous. Thank you, Dave. See, so glad I have a husband who keeps me on an agenda. All right, Michelle, real quick, and then Kevin will be up.
Okay. How many of you have ever shopped at Kids Market? Have any of you? Okay, so we shop there. We've done that for the past couple of years, and every year I'm like, I should really call and see what happens to set up here, or what goes into that. And so this year I just decided I was going to email the lady, and she emailed back, and I just was expecting her to give me some information like, okay, if you want to be a vendor, this is what's required. And she said, this must be your lucky day, because I guess she had just heard from her origami owl lady that she could not do it, and so they had a jewelry spot open, and she said, do you want me to send you the registration forms? And I was like, well, sure. But there's like one day that I can do it. So I was going to see if any of you would be interested. I have a list with the days and the hours that they're open those days. So I'm just going to send that around. If you're interested in participating, I thought we could get together and maybe make a roll to win board, do some other things, just figure out how we would split it up. The cost is $150. So I'm not going to spend $150 for being there one day or part of the day. So I think if we had 3 to 5 people, or more than that would be great, but so that we could split it up, split the cost. It would also be a great opportunity to just get your name out there, to maybe meet some people for bookings or people for prospects. Most people who shop consignment stores like shopping for free and half price, so that would be a good way to maybe get some hostesses. So I'm just going to send these sheets of paper around, and if you're interested but have no idea like what your schedule is like, if you just want to put your name at the bottom and your email address, then I'll set up a list of people and send out lists. So I'm thinking, I talked to my husband and he said probably even just 3 people might be good, but I think it would be better the more people we had, the better. So yeah, I'll just pass it around.
Thank you. Yeah, and actually a long time ago, when I lived in Gainesville, me and Lacey did a vendor event. One day it was a 3-day event, and we actually both went for all 3 days in a row, so that was a long time. But they're great. I mean, vendor events are hit or miss, and so you may end up with a ton of contacts, you may end up with a lot of jewelry sales, or you may end up with nothing. Okay, so I'm just making sure you're aware of that. But I do think it's worth it if you're able to go for a day or even for a section of a couple hours. It's a really great way to meet people. And so it's a great way to book parties or find prospects because you're just meeting a ton of people. So I do think it's a good opportunity. Just know that they are hit or miss, okay? So don't come back and say, oh my gosh, I sold nothing, and get mad because they're hit or miss, all right? Okay, Dave, come on up. He's going to introduce our guest for the evening.
All right. Okay, so last year I tried to get Kevin here, and we just couldn't get him on the schedule. So the story with Kevin is I was raised by an accountant father. I've always done my own taxes, And obviously our life changed. We moved to Birmingham. I started getting paid by 2 different entities. Danielle started doing well in Premier, and that became a bigger portion of our income. And we have a rental property in Florida. We get taxed with state tax here, but not there. There's all these things that happen to my taxes that made it just confusing. And I just actually wanted, my biggest thing to go to an accountant was I wanted to be honest. I really wanted to make sure I was doing it right, doing what I was supposed to be doing, and making sure that everything was where it needed to be. So I actually did my taxes for 2013 by myself on TurboTax, and came up with, I owe some money, which was expected because of how Premier pays out. I expected that, and we had that money saved. But I called Kevin up because he was recommended by another jeweler, and he said, well, I'm happy to just review that for you. And I was thinking, okay, I mean, what's that going to cost me? And it was actually very, very minimal. He reviewed my taxes, and he found $1,000 extra legally that I shouldn't pay the government. And it was just something I had missed that I wasn't even thinking of. And it was a very simple miss that anyone could have done. And so from then on, I said, well, okay, well, can you file those for me? Because I hadn't filed them yet. And so he filed them. He charged his little minimal fee, and we ended up with like $900 extra in our pocket. So I'm not saying an accountant's necessary, but they are an amazing resource. They went to school for something that most of us don't want to do ever or like. And Kevin's really friendly. He's down to earth. He has a great accounting background, and now he's just doing personal accounting, which is an amazing resource for someone who's done big market accounting and now is kind of on the with the little people. So so with no further ado, Kevin's going to come up. He's going to talk to us for a little bit, and then actually a big part of this at the end. Questions. He loves questions. He wants you to ask personal questions, like broad questions, questions about sales in general or how to file taxes, that sort of thing. And while he's here, let's use him as a resource. And I know he's going to have some information about, like, if you want to talk to him later, it's tax season, that sort of thing, and he'll get you that information. All right, so let's welcome Kevin.
Thank you. I'm impressed that all y'all showed up tonight. The weather is not fit. But I'd like to pass these out to you. These are some worksheets that, take those and pass those back, please, that will help you put your business together to do your taxes. Thank you. My name is Kevin Green. I'm a CPA. I do enjoy doing personal income tax returns. I do have a corporate tax background. I own McAnnally Tax Services in Gardendale, and I'll go ahead and warn you, I'm not a public speaker. That's why I went into accounting. I didn't go into sales. But I'll stand here and do the best I can. As I go along, I'm going to kind of describe what a lot of these categories are and what you can be looking for. If you have a question as we go, feel free to ask. We'll take questions at the end. But again, I don't mind this being a discussion type process. The biggest thing is in doing a small business or any kind of home-based business is that we want to turn as many personal expenses into business expenses as we possibly can. So we don't want to make new expenses. We don't want to operate at a loss. But if we can take expenses that you're going to have anyways and turn those into business expenses and push you to a loss, that's exactly what we want to do. We don't want to show a profit. I know that I get a lot of ladies that come in and say, look, if I show a loss, my husband's going to kill me. But that's the goal. I've had some pretty successful jewelers that have showed losses early on for several years. So our goal is to show a loss. Basically what we're looking at when you come in is organization. If you're organized all year long, you keep yourself organized, you won't miss a whole lot of expenses. And I don't like to miss expenses, and you shouldn't either, because if you miss expenses, that means you're costing yourself money. So it's good to kind of keep up with this as you go, and it's good to have an idea kind of how to do this. Really the starting point is going to be your home show sales, those CV reports. And I've had jewelers come in that weren't prepared. We've actually had to go out to the Premier website and pull their monthly CV reports. Well, I'll be honest with you, I don't really like doing that, but I will do it if we have to. So we'd love if you went ahead and knew what your CV reports were, and had your home show retail added up. We would subtract your CV, Then, of course, we subtract any returns and allowances, and we come up with a gross profit. Now, for those of you that are receiving 1099s, that's something that will also go into the gross profit as well. Your commissions, do I need to stay in one place?
Oh, no, you're fine.
Okay. I'm a pacer.
That's good.
The 1099s that you receive, and there's some things in the 1099 that we want to be careful of. When you receive your 1099 for your commissions at the end of the year, Premier typically is going to include any jewelry certificates that you were awarded, any trips that you were awarded. Well, many of those things we can take right back out as an expense. For instance, if you receive a jewelry certificate, then you turn around and buy samples with it, or you buy jewelry with it. We don't want to count that as income because you've turned around and reinvested that money right back into your business. So that's what a lot of jewelers early on tend to miss. They tend to miss those jewelry certificates, and if you do win a trip, you go on one of the Premier trips, whether it be a cruise, New York, Disney, something like that. Premier will include the cost of that in your 1099. Well, that typically, correct me if I'm wrong, but when you go on those trips, most of that's business. You're with upline, downline, going to meetings. Well, that's a business trip, and if the purpose of a trip is business, then it's fully deductible. So that's one thing that a lot of jewelers miss are those things that are on the back of the 1099. Commissions, a lot of times, I don't want you to get too wrapped up in categories because most of the stuff is deductible regardless of where you put it. The IRS isn't going to, we don't have anybody in here that works for the IRS, do we? I spoke to a Premier group one time and there were 2 IRS auditors in there. That was uncomfortable. Good. So I don't want you to get too wrapped up in categories. The only real category that needs to be separate, that you need to be cognizant of, is meals and entertainment because we treat those differently. There's a different percentage that is deducted for meals and entertainment. We'll talk about that in a little bit. But if you put something in samples instead of in supplies, something you got from the service store, don't be too wrapped up in what category you put in. Try to get it right, but if we miscategorize something, it's not the end of the world. Because if it doesn't belong in supplies and it's in samples, it's still deductible. So ultimately, it's not a problem. Commissions, that's, if you pay, typically what I like to put there is your kit, the renewal fees. It's actually commissions and fees, any exchange fees, things along those lines. Advertising, if you buy business cards, I have some jewelers that advertise in magazines. Anything that you do to promote your business, whether you sponsor a baseball team or a softball team, we'll drop that in advertising. We don't, advertising and donations sometimes go together because donations, you may make a donation, but if you're making it to promote your business, then it's really advertising. And the reason that's important because donations aren't an expense for your business. Donations are contributions are a separately stated item that moves over to your personal tax return. And the reason that's important is because when you're in Premier, if you show a profit, you're going to pay income tax and self-employment tax. So any expense we can put on your business as opposed to over on your personal side, we want it on your business. So if it is to promote your business, we want to drop it in advertising and not necessarily call it donations or contributions. Car and truck expense, that's going to be a big one for y'all. That's probably one of the biggest expenses and one of the most undercounted expenses. I've got a lot of jewelers now that are using the Mile IQ and some of the different apps, and that's a great way to keep up with your mileage. What the IRS says right now, they're allowing 57 cents a mile for 2015, and those add up to quite a few miles, or quite a bit of expense. If you take your miles and multiply by 0.57, that's going to be a very large expense. So what our goal is to capture as many miles as we can, to make as many miles for your business if you can. Now, if you need to go to Walmart for something, and let's say you need something for your business, and you happen to pick up a few groceries, maybe you can be a little aggressive on that mileage. Maybe you're not comfortable with that. But what the IRS says you need to take your mileage off on your tax return is a contemporaneous mileage log. Now, I had to look up contemporaneous. I didn't know what it meant. It means you have to keep it as you go. So you can't wait till the end of the year like Norm did on Cheers. I don't know if too many of you are old enough to remember that, but you have to keep it weekly, daily, whatever. And the apps on the phone, they're a great resource for that. What you need is you need the date of travel, the business purpose of travel, and the number of miles traveled. Now, what's become popular with the IRS and even the state of Alabama in audits, and I'm saying this from firsthand experience, is people will come in and they may put 10, 12,000 miles on their tax return. Well, you've got a complete mileage log, and the IRS really can't do anything about it. But their new gig is they want to say, okay, prove that you actually had that many miles on the car. So if you change your own oil, all I can say is maybe take a picture of your odometer every time you do it. But if you're getting your oil changed by an express oil change by a Walmart or something like that, they do an odometer reading. So make sure you keep that little piece of paper. Keep your fuel receipts. You know, if you hand them a box of fuel receipts, then they can't really argue the miles. And the fuel receipts, we don't necessarily count the fuel receipts because the way it works with your car expenses, you either take actual expenses or you take the mileage. When I say actual expenses, I'm talking about gas, I'm talking about repairs, the interest on the car, the depreciation of the vehicle. Now, even if we do all those, we still have to take, a business percentage versus a personal percentage, which means we still have to keep up with the mileage. So if we had $7,000 of expenses on the car, we still have to allocate between business and personal, and we still have to keep up with the mileage for that. Almost always, the mileage is a better deal. It's almost not even worth looking at in most parts. Now, you go out and you buy a $70,000 SUV or a pickup truck. You know, we can talk about that, but there's some luxury auto limits that the IRS won't let you take so much depreciation, which is what keeps the mileage the better deal. But keep up with your mileage religiously. Coming here, coming in trains.
Do you have to put the actual odometer reading or just the miles?
Just the mileage you drive.
Okay.
You know, what a lot of people do is, the name escapes me right now, but where you go on the internet and you print that off, the little mile, it says from here to here. MapQuest, that's it. They do the MapQuest reports and they keep those. You can do that as well. You know, that's the apps you have to buy. I mean, there's a cost to the apps. They're not free. Wish I'd developed one, but at any rate. So definitely be aggressive with the mileage because that is a great expense. I expect that it's going to go down in June. The IRS usually reassesses in June because the cost of gas has gone down. I expect the mileage rate to go down in June. Contract labor, you know, if you pay somebody to help you do anything. A lot of jewelers will pay somebody to come in and do some paperwork for them. A lot of them might pay somebody to watch their kids while they're working. That's actually daycare expense, but that's where a lot of jewelers will drop that under contract labor. Insurance, if you are, you know, I have a jeweler or two that's bought some liability insurance. When you get to that point, early on it's not necessary, but when you get to that point, that's where that would go. Interest, if you have the Premier card, the interest in the Premier card is deductible. If you don't use the Premier card, you use another credit card. The interest from that card is deductible if you use it for your business, if you use it for business expenses. Now, to do that, you have to get into proving that they were for business expenses. So if you have a personal card and you're doing your Premier expenses on there, it's going to be a little difficult to allocate between that. So if you're going to do a lot of that, I would suggest you get a Premier only card, whether it's the Premier card or another card. I would suggest you get a card that you use only for your business. Legal and professional services, that's people like me. Attorneys, if you incorporate, things along those lines. Office expense, any office supplies you buy, computers, printers, you know, anything along those lines. Rent, vehicle, machinery, equipment. If you rent a vehicle to go to rally, a lot of people won't drive their own car. If you rent any equipment to help you, rent a booth. Like the vendor show that you're talking about, if you rent a booth there, that's where the rent would go there. Rent other business property, that's typically for real property if you've got a storefront. Supplies, that's kind of a catch-all, and that's what my IRS auditors and my group that I talked to before didn't like, but in fact that's a catch-all. You put a lot of different stuff you buy from the service store, you know, just anything you use for your business that you don't generally have a category, I kind of drop it right there. Obviously, if it's not supplies, we won't put it there. If it's child care or something like that, we'll find someplace else to put it. But if it doesn't have a category and you're buying something for your business, you know, a lot of times we'll drop it in supplies, just kind of a catch-all. Taxes and licenses, you're in good shape there. The Premier covers all the sales taxes. If any of you have never dealt with sales taxes, then you don't know how much of a value that is. because that is heartache and pain. If anybody ever, let's say, I've had a Premier jeweler maybe go to the Bessemer flea market, not flea market, but the Civic Center over there where they do trade days or whatnot. You know, Bessemer actually come up and make you apply for a sales tax number and make you pay sales taxes. That's probably the only time you'll deal with something like that. Oh, travel and hotels. Travel and hotels, there's a couple different ways to handle travel. If you are traveling for business purposes and you happen to do a few personal things for entertainment or whatnot, but the trip is primarily for business purposes, the whole trip is deductible. Okay, I have a lot of folks that have family in other parts of the country, and they'll travel there and they'll do a show or two. Well, if you're going there to see your family, but then you do the show as an ancillary measure, then really you've got to allocate. You've got to allocate between, you travel between your business and your personal. Now, if you've built a heck of a downline in Michigan, and you're going, I've got one, and you're going to Michigan to put on, to do your shows and to talk to your downline, to counsel your downline or whatnot, and you happen to visit your family or stay with your family, we can write that whole show off, or we can write that whole trip off. But the primary purpose has to be business. Otherwise, we have to allocate between personal and business. And in that, you know, you're going to put the cost of hotels, not mileage because we're using the mileage somewhere else, but any entertainment, if it's a business trip, any entertainment that you do. Meals and entertainment, that's what we need to talk about as well. There are several different meals and entertainment categories. There's 100%, 50%, 80%. The two that you're going to be most concerned with are 100% and 50%. What that means is how much of your meals and entertainment are deductible. If you're traveling for yourself, or if you're taking out a prospective client, or if you're meeting your downline, eating dinner with your downline, that's 50% deductible. The IRS has basically said that, hey, you can only deduct half that meal. And what the reasoning is, I don't know if they're not letting you take your own meal or how they're doing it, but you can only take half that meal. If you are providing a meal for your downline or for your employees for your benefit, that is a 100% deductible meal. For instance, if you have a get-together like this and you cater, maybe it's an all-day training, and you cater a meal to keep people from leaving, that's a 100% deductible expense. At my firm, we have preparers that come in at night. We provide dinner for them because, quite honestly, I don't want them leaving. I want them to stay there and keep working. So I provide them dinner. That's a 100% deductible meal. Per diems, if you are traveling, you can take a per diem for every day you're out of town overnight. Every locale has its own per diem. You can take what's called a continental U.S. per diem. Let's say you've been to 15 different places and you don't want to basically go out and figure out what all these different places are. You can take a $46 across the board deduction for meals and entertainment. And that's per day. Now some of you might say, hey, I spend more than $46 if I go eat because I eat fancy. Well, take what you spend. But if you don't spend $46, then we can just take $46. So sometimes when you're traveling, you're going to rally or something like that, that can be a benefit to take that per diem deduction. Home office. All right, we'll come back to that. On the next page under other, you'll see some different expenses that we categorize. If you visualize a Schedule C, and sometimes I bring a Schedule C and hand it out and I show you, but if you visualize a Schedule C, which is what most of you will report your business income and expenses on, there's a place on page 2 for several other expenses. And that's where you can categorize just about anything that you didn't see in those categories. Some of the ones that we use in Premier: downline incentives, hostess incentives, samples, gifts, training, cell phone. Now, if you use your cell phone for Premier, we can allocate a portion of your cell phone to your Premier business. And remember, I said we want to turn personal expenses into business expenses. We have to be reasonable. You can't come in and say, okay, 100% of my cell phone is Premier, unless you've got a separate cell phone just for Premier. If you did that, or a separate fax line just for Premier, or a separate internet just for Premier, then you can take 100% of that. But if not, you've got to take a reasonable percentage. And typically we've gone as high as 85% of a cell phone bill. But if it came down to it, and I've seen it happen, the IRS will make you provide a bill, and they'll make you categorize those calls between business and personal, and then they'll do the percentage there. Now, a lot of times they don't like to get into that. So if you do a reasonable percentage, they won't do that because they don't want to go through your phone bill. But if you come in and say, I use 95% of my phone for Premier, they'll do it out of principle. Same with the internet. There's really no way the IRS can come in and check that, but be reasonable. 50%, 60%, you know, even 75%, but not 100%. Miscellaneous, again, that's just another catch-all. Other, that can be just about anything. I've seen some crazy expenses, maybe computer expenses, things along those lines, website expenses. How many of you have a room in your home that's used exclusively as an office? Okay, good, good. That's another case of turning a personal expense into a business expense. What the IRS says, and they used to be very strict about the home office. They didn't like it, but back maybe 1999, 2000, they went ahead and relented a little bit and realized that a lot of people were working from home, and they've even given a simplified method now. What happens is you want to take the room in your home that you're using exclusively as an office, take the square footage, divide it by the living square footage of your entire home, and that is the percentage of your home office. That percentage is important because then we'll take a percentage of your mortgage interest, your real estate taxes, your homeowner's insurance, your utilities, any rent you pay, any repairs you make to the general overall home. In the home office, there are what's called direct expenses and indirect expenses. An indirect expense is something you do to the entire house, and then you take a percentage of it. Let's say you use 10% of the house for your home office, and you roof the house. Well, you can take 10% of that as a home office deduction. And we may need to set up for depreciation, just depends on whether it's a replacement or new. But if it's a direct expense, let's say you have that office and you paint your office, or you have to put a new window in your office. That's a direct expense, and we're going to take 100% of that deduction because it was done directly to your home office. The big thing about the home office is it has to be used as your principal place of business, and it has to be used exclusively for your business. So if it's your dining room table, we can't do it. You know, and it's different as you start hosting groups at your home. If you start using more and more of your home, then we can talk about it. But the key is that it has to be used exclusively for business. And you'd be amazed at how much that home office means. The thing about a home office is most of the expenses in a home office are not currently deductible unless you show a profit. If you show a loss in your business, which is what we're trying to do, we're trying to get to a loss. You show a loss in your business, we have to carry the expenses of the home office forward. I have a jeweler in particular that she showed losses for 4 or 5 years, and the 5th year we showed a profit. But we wiped the entire thing out because we were carrying the home office expenses forward. So even though she had a profit, we completely annihilated it with prior year's home office expenses. And what the IRS has even come out and done, they've basically come up with a simplified method for the home office, which basically says, hey, you don't have to go through calculating all that stuff. Tell us what the square footage of your office is. Tell us what the square footage of your home is. We'll give you $5 a square foot deduction. And so a lot of people are just going that route instead of doing all the calculations for home office. Because, you know, a lot of people don't want to keep up with their utilities, their electricity, their water, pest control, alarms, things along those lines.
Does that hurt you when you go sell your house? Is there any?
It can. If you've depreciated your house, that portion of your home that you've depreciated doesn't qualify for the exclusion of gain on sale of home. So that's something you want to be careful of as well. And that's why a lot of people are moving to the simplified method, because they don't want to consider that when they sell their home. So basically, the home office, you could possibly pay a gain on the sale of it. The rule now for the gain on sale of your home is if you've lived there 2 out of the last 5 years as your principal residence, you can exclude the gain on your home up to $250,000 for a single person or $500,000 for a couple. You don't have to reinvest it. You can go take it to Mississippi and gamble it. Whatever you want to do with it, it doesn't matter. But if you have depreciated a portion of your home as a home office, then you can't exclude the gain on sale of that portion of your home. So that's a good question. That is a consideration. That's about what I got for you guys. Any questions? Yes, sir.
Can you talk about the paying someone to take care of your kids, child care, making someone stuff envelopes for you while they take care of your kids? You know, that kind of thing. Like,
I see where you're going. Absolutely. If you're paying somebody to do office expenses and they happen to be taking care, or to do office work and they happen to be taking care of your child, then you could potentially write that off as contract labor. The thing about paying somebody to watch your child is in the IRS code, there's actually a daycare credit. To take this daycare credit, both parents have to be gainfully employed and showing a profit. And the unfortunate part is you have to report the EIN of the provider. So if you're paying a babysitter and you want to write that off as a daycare credit, you have to give their social security number and address, name, social security number and address on a tax return, which means the IRS can then cross-reference and say, hey, you showed $1,000 in daycare income, how come you're not filing your tax return showing this $1,000? So you have to be very careful about that. Now, anytime you pay anybody more than $600 to help you, you have to either give them a W-2 or a 1099. Most times you're not going to do a W-2 just from the simple fact that you don't want to match taxes, you don't want to go through filing 941s. You have to kind of be, that would be a big decision to put somebody on a W-2. So a 1099, typically, if you pay somebody more than $600, you're going to have to issue them what's called a 1099. How many of you have had to deal with a 1099?
to give it or
To get it. So with a 1099, the thing about a 1099 is that's self-employment income. You have to pay income taxes on it and you have to pay self-employment taxes on it. So people don't like to get 1099s. And a lot of times when we deal with folks that are issuing 1099s, we let them know, say, hey, if you're going to issue a 1099, get the person you're paying to fill out what's called a W-9 before you issue the 1099. The W-9 gives you their name, social security number, and address, and is an affidavit basically that they are who they say they are. As long as you have that W-9, even if they gave you a fake social security number, your blood is covered. If you haven't got the W-9, many times, first thing I did, I went to work for PricewaterhouseCoopers as a junior accountant. First thing they made me do, a large company was audited for their outside services. They had $2 million in outside services that they hadn't issued 1099s. So my job was to go through this list of people and try to get them to fill out W-9s after the fact so that we could then issue 1099s. Well, some of these people were pretty on to what we were doing. And sometimes they'd hang up the phone on me, or they just laugh and tell me they're not giving me that information because basically they knew they had received that money and hadn't received any indication, the IRS hadn't received any indication they'd received the money, and they weren't going to go back and provide that information at that time. And there's no way to make them. So before you hand them the check, you got to make them fill out that information for you. Any Obamacare questions?
I have a question about with travel. What about with your spouse? If your spouse is with you, so like what can you deduct from that?
If your spouse is an active participant in the business, which in Premier a lot of spouses are, then and they actively participate, then there is no delineation between what they do and what you do.
Okay.
Now, if they're not, if they're just along for the ride, if you have 2 plane tickets, you only deduct yours.
Okay.
1 hotel room, you're going to have a hotel room anyway. You deduct your hotel
But
room.
if they're going to attend rally or
Right.
then that's
If they're actively
okay.
working in your business, then
Okay.
you can deduct everything they do.
the $46 a day? Did that used to be $59?
59 is for, the IRS came out and said $59 is solely for workers under the Department of Transportation
Okay.
regulations. So they've come back, and it was something that we basically used loosely, but they came out a couple years ago and said, hey, that $59 is only for transportation workers. You've got to use 46. But most locales, and a lot of stuff with Premier seems to be done in Texas. Texas has very high per diems, with the exception of Houston. But if you're worried about $46 not being enough, if you look around, and the IRS has a list out there of what the locales pay, there are a lot of much higher per diems than $46. But $46 is what you can take across the board, not have to look any of that up. Of course, if you go outside the continental United States, it's much higher, but I don't know that y'all do that a whole lot.
No, in Canada is there.
Well, there you go. That's called, I think that's closer to $60 right there.
Now, do you do with the Hooden House that some of us have?
Yes,
Do you know?
Hooden House is a very good program.
Okay.
I guess, from what I understand, it was designed by accountants. And it basically looks just like the Schedule C for the most part. So if you're keeping up with Hooden House, you're good. Whether you're doing Hooden House or whether you're doing Excel spreadsheets, or whatever your method is, as long as you're categorizing and keeping your information. I see mostly Hooden House and Excel. Those are the best ways to keep up with it. So,
Okay.
Hooden House is a great program.
But, and you're good to, you know, my fear has been, like, as I'm entering things in, I'm not, and, you know, already picked up on some things that haven't even thought of. But you would be able to go back and look at our Hooden House printout and then know how to dig a little bit more.
Absolutely,
Ask.
especially if you give me the detail. You know, the Hooden House, of course, they print out a profit and loss. I forget what the other report is. That's much like maybe a trial balance, but a lot of times jewelers will bring me the detail, and I can thumb through the detail and see just exactly what went where. And I'm perfectly happy to do that, to see what we're missing and what we're not.
Going back to the mileage, we talking about going to different places for business purposes, like bank, post office, Walmart, whatever. I don't really do that great of a job of, like you said, logging, but I do have stuff, because you said it has to have like the date, you know, all that. Like, I use all of my purchases, everything. I always use a card that's Premier related, so I can go back on my bank statement and go and look. Is that, I mean,
Well, that's up to the auditor. Sometimes the auditor will allow that, sometimes they won't. Most times they will, but at that point, you brought the auditor's judgment into the case, and they can disallow that if they choose to, because you didn't do exactly what the Pub 17 said, and keep up with it exactly the way they said to keep up with it. And if they're trying to be a stickler, and I've seen it go both ways. I've seen auditors just say, okay, that's reasonable. But now, if you drive a lot of miles, and it seems like a very, it almost looks like it might be to excess, but you actually have those miles, and it does happen. You're going to want to do everything you need to, because the auditor will, if it looks, in his or her judgment, if it looks like an excessive amount of mileage, they'll throw it out. So, the more you can do to cement that, the better off you are.
You mentioned cell phones. What about a cell phone that has multiple lines associated with the bill, only one line is used for the work? How would you handle that? Or
You just allocate based on what line goes to who. A lot of times, you know, you get the, well, my husband's line is the main line, I'm paying $10 as an add-on. You know, you can, if there's two people on the line, you can allocate the cost of the phone between the two people, rather than saying, okay, his is $180 a month and mine's $15, $20 a month. It doesn't really work like that in reality, because the sunk cost is already in the first line. So you just allocate between the number of lines on the phone. And if one was excessive usage, I mean, you could even allocate between. Typically what we do is, you know, if you've got 3 people on the line, it's $240 a month, it's $80 a line. And then you allocate a percentage based on that. And the IRS has been okay with that. Like I said, they just want something reasonable. You know, if you've got something more than that, then I would suggest you have some good proof. Like I said, they don't want to go through yourself, but they will. But they will.
Is a W-9 annual or continuous?
It typically needs to be annual. You can use it continuously. Once you have it, you're pretty much okay. But the IRS likes to see new ones each year. But I mean, you could probably get away with a continuous W-9. You know, once you have their information is good. What might change might be their address, but their Social Security number obviously shouldn't change. So it's a good question. You can get away with a continuous, but they like annual. Actually, you see a lot of employers will come out with your W-4 forms, and they'll make you fill out a new one each year. You know, a W-4 form can be continuous, but technically, the IRS wants you to fill out a new one each year. So some employers will do that, some employers will not. It's a good question. Yes, ma'am?
With the mileage, would you repeat all the details we need with that?
Sure. Date of travel, purpose of travel, number of miles traveled. Now, if you're traveling out of town, it would be a good idea to put where you travel to as well. You know, if the purpose of travel is not going to the bank or going to Walmart, then it'd be a good idea to put location of travel. Yes, sir.
What about like say backing out of a jewelry show and having a little finger bender? I'm asking for a friend. Is that obviously depreciates the car? Is something else?
Typically not. Typically that goes back to the actual expenses of a vehicle versus the mileage rate. Because the repair of a vehicle, if not covered by insurance, then it would be an actual expense of the vehicle. So typically that would fall into that category. But one thing I did say, I probably said this wrong, was when I told you the interest expense on a vehicle is an actual expense. It's actually not. It's actually an expense you can take in addition to mileage, because the interest isn't considered on a vehicle. Even though the vehicle is collateral, the interest is considered on a loan. And if the vehicle is a vehicle that you use for business, then the loan is a loan that you use for business. So we have in cases taken the interest in a vehicle is in addition to the mileage. So that was, I think I called that an actual expense a while ago, and I want to reiterate that. I want to contradict that and say that we do take the interest in addition to the mileage.
If you have your office in your dining room and you only use the table once for Thanksgiving,
well,
where do you eat, Cheryl?
in the living room,
McDonald's,
around the TV, yeah.
You know, the IRS isn't going to come out to your house. You know, they're not going to come inspect. I've only seen them come out to somebody's house once, and that wasn't for a home office. So, and if they do, I mean, call me. I'll help you move the table out of there, and they're not going to come out to your house. So, if you, in good conscience, can say that room is used exclusively as an office, then I would say go for it. In that instance, if you only use it once a year, I'd say that's office.
Our office is also an art room. Like, there's one portion of it that's office and one portion that's art room for our kids.
Okay.
Can we just take like the square foot of the part that's office?
Yes, it's got to be a space, not necessarily a room, but a space that's used for an office. I don't know if you have a partition up or.
We don't, but I mean, there's 2 computers and a desk and other.
Yeah, it has to be a space used exclusively as an office. So they have allowed to split a room, a large room, or even a small room. So, yeah, just as long as that is all you use that for.
Now, if that room has the bathroom joined to it, say it's a bedroom and it has a bathroom, you count that space as well?
Do you only use the bathroom for your office?
Well, only when I'm up there. I mean, but that's what I go up there. It's an office space, and that's all I go up there for.
Yeah, if that bathroom is not used for anything else except when you're in your office, then absolutely. And like I said, you got to remember, they're not going to come out to your house. So I'm not telling you to be too liberal, but I wouldn't sweat the little details like, okay, we have a closet that we store some Christmas trees in. I wouldn't sweat that. Or a dining room table once a year, I wouldn't sweat that. I mean, the IRS isn't going to sweat the small stuff. So as long as you're doing.
It's a tiny bathroom.
Yeah. I think you're okay.
It's worth
Yes, sir.
So Kevin, we talked about this at one point. The $600 mark for having to file a W-2 or 1099, and with kids, because our kids are getting to the age where they can help mom a little bit. Our oldest can stamp and stuff and all that, and we discussed at one point paying her less than $600 a year would avoid any tax on her, but also be a nice deduction if she's actually helping mom in the office. So is that something that just you write her a check and deposit into a checking account for her, and then just make sure your total is less than $600? Is that the best way to do that? Or?
Absolutely. They on the other side of that, if you have self-employment income, which actually that is for your children, is if anybody has self-employment income of $400 or more, they're required to file a tax return. Now, I mean, if you paid your child $500 and they don't file a tax return because it was over $400, I mean, nobody's really looking at that. Technically, if they made over $400, they should have filed a tax return. I have some jewelers that pay their children a significant amount of money, and that's okay. You never want to do this if you're not operating at a pretty decent profit. You pay your children money, they have the self-employment tax, but you basically move the self-employment tax from you to them. Of course, you pay it for them. But so the self-employment tax is a wash. Comes off of you, you add it to the children, you've really accomplished nothing. But then you can pay the child up to for federal purposes, you can pay them up to $6,200 and then not have to pay income tax. So if you have a profit, you can pay them $6,200. They're going to pay their self-employment taxes, but you would have anyways. But you basically avoid the $6,200 of income tax on your personal tax return, moved it over to the children who don't pay income tax on it because it's not enough, it's not above the threshold, and you just shield the $6,200 of income from taxes.
And that would be something you'd want to work through with your accountant, probably.
Because I had a couple different jewelers. It was a mother and a daughter, and I guess that's what you'll call it, Premier, mother and daughter in Premier. The mother did it, and it worked for her. The daughter did it, and it didn't work for her. So she really accomplished nothing because of where she was as far as her profit. So each situation is unique, and you need to check with your accountant on that.
And so how do we do that? We just contact you?
Absolutely.
If we would like to
Absolutely.
set up a...
Absolutely. You want somebody who is going to be familiar with you,
Yes.
with Premier, and let them know what you're doing. And they should be able to look at your income numbers and say, yes, that makes sense. No, it doesn't make sense. And we can certainly do that for you.
And then the fee you said, the fee that you charge, that can be an expense?
Absolutely. And we have pretty much a set fee for Premier. We probably do taxes for, I'd say, somewhere between 60 and 100 Premier jewelers. And so we pretty much set a fee for Premier jewelers. It's a little bit lower than we would charge otherwise, but if you do an itemized return and you do a Schedule C, home office, whatnot, we're going to charge you $130. And that went up a little bit this year because we had to do some different things for Obamacare, among other things.
What if you do Premier and you have a full-time job?
That's okay. That's okay. Because basically,
Still the same price?
Yeah, absolutely. We charge $115 for a basic itemized return. You add Premier to it, we charge another $15 to add that $15 to that, and we're at $130. Now, if you have a rental house or something like that, we may add another $20 or $30, but we're really very reasonable.
That's great. That's way better than TurboTax.
Well, I think if you buy the TurboTax Business Edition, I think you're going to pay $130 right there.
Yeah.
So
you do a joint return as well with spouse and everything?
Yes, ma'am.
And how does this affect, like if you have a negative expense and you couple it with your spouse's account, like how does that affect the taxes? That's actually to your benefit.
That's actually to your benefit because what's happened, let's say you're on a job with Premier and your spouse has an income. Well, your spouse has paid withheld taxes all year on that income, and then you have this income. Well, you're coming in with a loss and you're reducing the income. Well, your spouse paid taxes on this income, and we brought the income to here. So that shortfall gives you a little bit better refund or a little bit less of a tax burden. So the goal in Premier, and I told somebody earlier, the goal in Premier for the first couple of years is show a loss. If you're not showing a loss the first couple of years in Premier, we need to work harder at it. I mean showing a loss, not Premier. You're working pretty hard at Premier for the first couple of years. But most people we can show a loss for 2 to 3 years at least. Yes, sir.
That's a little bit off topic, but what is the rule on medical expenses? Isn't it like it's over a certain percentage of your income? Is that how it works?
It is. If you are under 65 years old, which I think everybody in this room is, there's a different rule for if you're 65 or over. Then for federal purposes, it used to be medical expenses had to be over 7.5% of your adjusted gross income to count them. Now, one of the Affordable Care Act provisions was to raise that to 10%. So now medical expenses for federal purpose has to be above 10% of your adjusted gross income before you can start counting the first dollar. For Alabama purposes, it has to be above 4% of your adjusted gross income. So very rarely do we get to count something for federal purposes anymore? But it's worth keeping up with for state purposes. Yes,
I
ma'am?
have a question about Hood and House. When I first got it, I didn't realize that I was supposed to go through it to order like supplies. So I ordered stuff from Premier and Hood and House. Is there a way for us to print that out so I have all that? Does that make sense? If I do my Hood and House, that stuff that I bought from Premier is not going to show up on there.
Yeah, you can just, what a lot of people do is they'll write it in on the Hood and House, or they'll have a separate worksheet. I have jewelers that will bring me the Hood and House, and then they'll bring me separate worksheets that they've done outside of Hood and House. So that's no worries. And my understanding is you can even enter those supplies into Hood and House.
Yeah.
Yeah, I
Go
think
back-
when you
go
order
back
it,
and do it?
it doesn't automatically get put into your
Yeah, it
expenses
doesn't.
when you order it from Hood and House.
Okay.
You still have to go put it into the expenses. So you're going to do that work anyway.
Anybody else? Anything I didn't cover that you'd like to hear about? Anything not related to Premier? No Affordable Care Act question.
What is it?
Well, I think you know. But the Affordable Care Act, I'll just touch on it for a second. I know you've heard a lot about it, Affordable Care Act, Obamacare. You've heard it addresses one of those two things. You know, what the Affordable Care Act is, of course, it's a way for people to insure the uninsured. How it affects you on your taxes. This year, it doesn't affect you much unless you don't have insurance or unless you want through healthcare.gov to get your insurance. Because Alabama doesn't have an exchange. The only way to get it is to go through healthcare.gov. Many states have started their own exchange. Alabama has dug their heels in and said we're not going to. So we'll see if they can keep that up. I know there's some Medicare issues and Medicaid funding that they're losing out on because they won't start an exchange. But one or two ways it affects you this year. If you don't have insurance, you pay the greater of a $95 penalty or 1% of your adjusted gross income. If you do have insurance through the exchange, basically what happens is when you call the exchange, when you sign up with the exchange, you give them your income. They, based on your family size, based on your income, they assign you to an insurance company and tell you this is how much your insurance should be. We're going to provide a credit or not provide a credit up to this much money. Now you can either have the credit applied to your tax return at the end of the year, which nobody does, because if they tell you your premium's $800 a month, but we'll pay $500 of it for you, that's what you're going to take. And the exchange will pay, the Affordable Care Act will pay that $500 for you to the insurance company. But that's called an advanced premium credit. Well, at the end of the year, if you made exactly what you told them you made, you're going to break even. If you made more than you told them you made, you're going to have to pay some of that credit back on your tax return. If you made less, you may get some additional credit. So the people that affects right now are only the people that don't have insurance or the people that went through the exchange. Next year, everybody in this country, as the rule now stands, is going to have to prove that they have health insurance. So and the penalty next year is the greater of $325 per person or 2% of your adjusted gross income. And that could be, amounts to quite a bit of money, could be. Biggest penalty I saw this year so far was $550. But next year you're going to have to prove, how you're going to have to prove that is whoever you are insured with, whether it's your employer or an insurance company, they're going to have to give you a 1095-C. And that's going to be entered on your tax return just like a W-2. And the government's going to reconcile your entry with the 1095-C with their records to ensure that you have health insurance. Now, I know you've heard that the IRS has all these new auditors, and it's true, they are auditors for the Affordable Care Act. Right now, Congress has defunded the IRS because they're angry with them because of all the stuff with Lois Lerner. You may have heard that. They have cut their funding by something like $325, $350 million. And what Congress is basically saying, hey, we're going to defund you from enforcing the Affordable Care Act provisions. But what the IRS has come back and said, by law, we have to enforce the Affordable Care Act provisions no matter what, and we are. We're going to let everything else slide. We're going to let regular audits slide. We're going to let customer service slide. And from experience, I'm telling you, they have. You know, if you need to talk to the IRS, you better set aside about 4 hours. Because you're going to sit on hold for an hour to an hour and a half, maybe 2 hours. Then they're going to hang up on you. And then you're going to have to call back, and you're going to sit on hold for an hour and a half to 2 hours, and you may get somebody. And now the IRS, where they used to help you, they want to send you to somebody else, and you wait another hour. I literally have somebody in my office that all they do is call the IRS. They may handle 2 cases a day right now. Used to be they'd handle 10 or 12 cases a day. So the IRS has made good on their promise. One of the things they said is, hey, we're going to delay refunds. That hasn't been the case. The refunds have come out pretty spot on. So they have not delayed refunds. But that's the Affordable Care Act in a nutshell. It may not affect you this year. It will affect you next year, unless it changes.
So there'll be, in theory, less audits of home business, personal.
That's the way it is looking, yes.
So write off everything. Buster and I were talking about if we met with you or file your tax, like, what's the typical turnaround on your refund if you file electronically?
7 to 14 days.
7 to 14 days.
And it's legit. I've already gotten my refund back.
You are on point.
Didn't take long, did it?
No, it took, I think, 10 days.
Did you get a state refund?
No, I had to pay the state.
Because those are
And
hit or
they
miss.
took that out quick.
Yeah, those are hit or miss. So, the state refunds, basically what the state says they do, the way it works is they have a fund, that's where the money's at. They pay refunds out of that fund until it's empty. When it's empty, that fund sits and waits for other people to pay in what they owe to pay out the rest of the refunds. So that's why a lot of people want to file early to make sure they get their state refund. Whereas if they file in March, chances are you're not going to get it for a while.
So how soon should we get everything in order and get to you? Like, what's a good time frame?
What we typically do is we do it a couple different ways. You can drop off your tax return with us. A lot of people do that. We have about half of our people drop off tax returns. Half of our people actually meet and prepare the tax return while they're there. So they actually walk out with the tax return. Everything's done. They come out once, and especially for folks that works well because we have a lot of folks that from outside our community that come and see us, and they don't really want to make 2 trips. And so most of those folks, we'll meet with them. We assemble the information. If they need to provide us some more information, we kind of work out in a way so they don't have to come back. And then typically you'll walk out with your tax return in hand.
Okay, cool. So we should just call, and if we want to meet, just call to make an appointment.
Just call. Myself, Sue in my office, she's very good with Premier as well, well-versed with Premier. I think right now, I'll just go ahead and be honest with you, I think I'm booked out till late March.
Yeah, it's late March.
And so Sue is, I think she's booked out till late February, and she's real good as well. So we have a couple of people in the office that are well-versed with Premier.
And Sue handles all of this stuff for me throughout the year. And then I meet with Kevin once a year. And so like, she pretty much does everything else too. And she's wonderful on the phone, very helpful, answers lots of questions. So.
We probably have 10 different preparers in our office. There are probably 3 of us that I tell you are very familiar with Premier. The rest could handle it, but they're not as well versed with Premier as the 3 of us are. I definitely handle most of the Premier. Sue's next, and then Judy is the next in line. But and after that, I'm not saying they can't do a good job, but they're not going to be able to probe you for expenses. They're not going to know what CD is. They're not going to, you see what I mean? They're not going to know what the service store is and things along those lines. But I've given this talk probably I've been talking to Premier groups probably for about 10 years now. So, like I said, I've talked to a few Premier jewelers, and look, if you're not comfortable using an accountant, by all means, do it yourself. Can you do it yourself? Sure, you can. Is it worth the heartache and pain? I don't. You tell me. It's second nature for me. But whether it's me or whether it's another accountant, make sure if you do deal with an accountant, they are familiar with Premier.
I think we talked about it one time, Kevin, that so let's say the average party's $400, so a jeweler should make $200, and you're there for, let's just say 4 hours. So $50 an hour is what you made at that party. It's going to take you more than 3 hours to do your taxes in TurboTax. I've done it for 10 years. So Kevin and I talked about that, and so I'd rather Danielle go do another show and take my taxes up to Kevin to make sure they're done right in Gardendale, or any accountant. I mean, Kevin's wonderful, but like, it really hit me. It's really nice and feels great to do your own taxes, but in the end, it's a lot of heartache for the same thing.
You know, it's just like anything else. I had a hot water heater go out last year, and I looked at it for 3 or 4 days, and I thought about it, and I thought I can replace this hot water heater. And then I looked at it and I said, well, it's probably going to take me 2 or 3 days. We're going to have to be without hot water for 2 or 3 days. I said, I own a business up here. I've got as much work as I can do, so I can go up here and make my money up here, which is going to be a lot more than if I spent 2 or 3 days working on a hot water heater. So sometimes you just pay the people to do what they do, because they can do it much more efficient than you can. But like I said, I know there's people out there that like to do their own taxes, and more power to you. You know, we try to, we particularly, I won't speak to some other accountants or H&R Block or anything like that, but we particularly try to price ourselves so that you say, okay, well, that may be a little bit more than me doing it myself, but it's worth it. So, you know, take that for what it's worth. And, you know, if somebody tells you they're going to charge you $300 or $400 to do your tax return, that's just too much. You know, but shop around and you'll find somebody that knows what they're doing and do it for a reasonable price. Anybody else? We good on time?
All right.
Yeah, that's great.
Awesome. Thank you, Kevin.
Thank you. If I can help y'all, give me a call.
Yes.
See you.
Good to see you. Nice to meet you.
Nice to meet you as well.
Okay. Well, did y'all appreciate that?
Yes.
Good. Dawn, when did you get here? Oh, I just missed you. Glad you're here. Okay. Not to point you out. Dawn's here. Okay. Well, I asked for Michelle. I think I might have only asked Michelle to bring her vision board. I meant to ask more of you to bring your completed vision boards from last time and just share out. But I would love for y'all to post them on the Rockstars Facebook page, or bring some next week. We can show Bob Bolander how visionary we are, and we can bring your vision board and we can share those out. But I'm going to have Michelle just kind of share hers, and I would love to see what your vision is for this year. It doesn't have to be the same. Just because Michelle wants to do X amount of shows a month doesn't mean that that's what you want to do for your business. And so just know that that's okay. Whatever is going to work for you, you just need to be confident in that and put that down. So if your goal is to do 2 shows a month, then awesome. We want to cheer you on in that. So don't ever feel like you need to do more because somebody else is. But Michelle's going to share her board, and I'm excited to hear what her vision is.
Okay, so we did these last month, and so if you weren't here last month, we can get you one of these boards and the little sheet of paper that helps you organize it all. So my verse of the year is what Premier's verse of the year is. For we are God's masterpiece. He's created us anew in Christ Jesus so that we can do the good things that He planned for us long ago. Just to keep in the forefront of my mind, just as I'm serving people and remembering why I'm doing Premier. And so one of my biggest whys of Premier is for family. So staying home with my boys, that's like a huge reason. But also just building relationships outside of the home and having a place that I can do ministry that's not just at home. So just having those doors for missions and fellowship outside the home, that's kind of the biggest reason. So, and then I have dreams in Premier of just, being able to share my faith, having ministry, like I said earlier. Then also just the freedom to travel more. I have a sister in South Africa. I have family in Virginia. Like, we have people all over, just that we want to be able to, and that's money. Traveling is expensive. Just being able to do that, but then also just being able to give more. So being able to help people and do, like, free our finances a little bit so that we can do those kinds of things. So those are some dreams of mine. Also just, and I didn't put it on here, but just kind of an underlying dream, just that Buster and I are part of a church plant, wanting him to be able to focus a whole lot on the church plant and not have to, have crazy hours and work whole lot, you know, to make income for our family, so that, you know, if I can carry some of that load, that would free him up to be able to do more with ministry. So, and then so for me to do my goals and kind of what we've come up with, is for me to, the goal is about $1,500 to $2,000 a month. So the goal is for me to do 6 to 7 shows a month and to sponsor at least one a month. That's kind of my goal. So that means my plan needs to be to share more people, or share the business, which is you know, it's just so rewarding. Not even just because, you know, people get in the business and we get to have a relationship with them, but just the chance to get to like know people and have those friendships and relationships, whether or not they decide to do Premier, just to share, you know, my story and hear their story and get to have, you know, that time with people. So to be intentional and to not give up. So on the months where it may be looking slim with bookings, like, don't give up. Just, you know, keep trying and keep contacting people. I was kind of low in February, so I am doing jewelry setup, teacher appreciation in 3 schools this month. And just trying to get into, you know, get to new markets and things like that. So just trying to be creative. But also, for those of y'all here, the best thing that I could say to you is to be in constant communication with your Premier mom and your upline, and even sideline too, but just don't feel like you're in this alone. That's part of not giving up, is having each other to rely on. My goal is to be one diamond designer by National Rally, and for a designer circle, and then just to be a blessing to everyone that I come into contact with through Premier. So that's it.
So good. Anybody finish their vision board and it's at home? Yay! The rest of you get to work. I mean, I'm not kidding. Really, you should. But okay, well, we're going to try to end early tonight because I know many people were very concerned about the weather, and it should be fine. It is supposed to get way colder, but like later, like midnight, 1, so you'll be fine. There won't be any ice on your way home, but just in case, we're going to get you out a few minutes early. And I think that Whitney has prepared a little devotion for us.
Yeah, it's really little.
Yes.
We will be getting out early.
So she'll do that, and we'll do raffles and pray. And you're welcome to stay and hang out. Just because we end early doesn't mean you have to beeline it out. I love just the chance to get to fellowship with people. And like Michelle said, that's what we're all here for. You know, your sideline, your upline, your downline. Just to be in relationship with one another and get to know one another and ask for help and tips and things like that. So don't feel like you have to rush out unless you just really want to miss out on the weather. Okay, so Whitney, come on up.
Okay. So Michelle asked me this morning if I would do a devotional, and I said it wouldn't be like super charismatic, but that I would try. It's something that's been on my mind for the past like week. I'm on a few moms Facebook pages like in Birmingham and just all over, and I was reading, you know how like things pop up on your newsfeed and you read them and then you feel bad about yourself that you're not doing all this stuff that this other person is doing. And like this mom was talking about like her hyper schedulized day, about like down to the minute of what she and her kids do and their craft time, and like it was so intense. And after I read it, I was like, well, I feel like really bad about myself. I like don't do any of this stuff. Like this is bad, but I do feed them. I kind of thought that I would talk about that because I think as moms, like we read stuff like that and we take it to heart, and we shouldn't. We feel like really inadequate. And then like after I read it, I was like, this is stupid. Like I need to realize like who I am. Like I'm a good mom. I give my kids cuddles and kisses all the time, and I feed them, and like they never go to bed hungry. And they have blankets in their bed, and he sits with the Elmo and Cookie Monster. Like, he's okay. Like, he'll live. He may not do craft time, but he'll be all right. Like, to remember that we are loving wives, that we love our husbands, we encourage our husbands, and to remember that we are a child of the King. Like, ultimately, whether my kids have craft time every day, like, God is okay with that. Like, he's fine that my kid might watch the iPad sometimes. Like, he's okay, right? I mean, they'll live. And it reminded me of the story of Mary and Martha in Luke 10. And so I looked up this little devotional, so I'll read that. The Lord answered her, Martha, Martha, you are anxious and troubled about many things, but one thing is necessary. Mary has chosen the good portion, which will not be taken away from her. That's Luke 10:41 and 42. It says, both Mary and Martha are believers, and both are zealous, but in this case, one is wrong and one is right. The difference between these two women is this. Martha is characterized by action based on human wisdom and understanding. Mary is characterized by action based on meditation and prayer. Martha has accepted many responsibilities, but finds herself completely overwhelmed. And it just goes on to say that depending on our own abilities rather than on God, Martha drifted onto the road of depending on her own works to gain acceptance with God. And I feel like as girls, women, we tend to do that a lot because we're like task-oriented people, and we have kids to take care of, and we have to feed them, and we have to do Bible time, and we have to do this, and then this, and this, and nap time, and it's like just, it's so overwhelming, and sometimes we can get so overwhelmed that we don't necessarily like have that quiet time or have those like meaningful conversations with friends that we need to have. And so what I took from it was just to learn to prioritize, and so I wrote down a few little ways that we can do that. As far as motherhood, I wrote cuddles and kisses, words of affirmation over hyper schedulizing and worrying about appearances. And I feel like when we read these blogs, and there's like 1,000 mommy blogs, and it's just so overwhelming. I need to just delete them all because you just feel, you feel like my life isn't as good as her life or whatever, and it's so stupid. And then wifehood, I heard something on the radio the other day talking about husbands and wives and how we tend to focus on the negatives with our husbands, especially like as women, we're just critical people. And to not do that, to focus on the positives more than everything that needs to be fixed. As far as Premier, to focus on serving our hostesses and our customers and our fellow jewelry ladies, not feeling inconvenienced by having to come to training or returning exchanges, cancellations, low retail, that these are all opportunities to serve one another.
Thank you. I think that was very effective. I like that a lot. Thank you. Okay, has everyone had the opportunity to get raffle tickets, those that have wanted raffle tickets? Dave wants the Jamboree nails back there. That's what he's holding on to.
Are you still dropping?
Yeah.
Okay, all right. Everyone take 2 minutes.
Take 2 minutes
also
and go ahead and drop them in there. If you need any more, Dave's got some back there.